Good morning, everyone. This is Marshall Gidler bringing you the morning comment for December 19th. Yesterday was a fairly quiet day, apart from a brief flurry of excitement when the Swiss National Bank announced negative interest rates. Good data from Germany and Britain, plus a calmer situation in Russia, brought greater confidence about global growth. Meanwhile, the FOMC meeting continued to reverberate and U.S. rates moved still higher. With the growth outlook improving, the commodity currencies gained, even though commodities themselves were generally lower. Same rationale meant less demand for safe haven currencies, and the yen and Swiss franc were the worst performing G10 currencies. Emerging market currencies were mixed. Now, I noted yesterday that the S&P 500 had the best day of the year on Wednesday. However, it beat that on Thursday with a 2.4% rise, so it's up 4.5% in 2 days. The fact that stocks can put in such a great performance while rate expectations and bond yields are rising shows confidence in the U.S. economy that's likely to support the dollar going forward, in my humble opinion. Greek stocks also had a fairly good day after the head of the opposition Syriza party toned down some of his more extreme positions. That could mean less risk for the euro going forward. Now, oil continued to fall after the Saudi Arabian oil minister said OPEC would find it difficult, if not impossible, to give up market share by cutting production. The Bank of Japan kept policy unchanged, as expected. The focus for now in Japan is on structural reform, not monetary policy. But as Prime Minister Abe is likely to struggle with his reform agenda, the pressure will eventually come back on the BOJ and back on the yen. Disappointing data from New Zealand didn't prevent the Kiwi from being the best performing G10 currency as the commodity currencies recovered. Since New Zealand has little energy in its export basket and isn't very much exposed to Chinese construction, I'd expect the currency to perform well as confidence comes back. As for today's releases, the Norwegian official unemployment rate for December is expected to rise a bit. On top of the falling oil prices, I think weakening fundamentals there will weigh on the Norwegian krone. The Canadian CPI is expected to be within the bank's target range, which could be supportive for the Canadian dollar. Retail sales for October are also due out. There are 3 Fed speakers scheduled: Chicago Fed President Evans, San Francisco Fed President Williams, and Richard Fed President Lacker. They're all voting members next year. Evans is considered a dove, Williams is dovish, and Lacker is a hawk. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, Head of Global FX Strategy at IronFX Global, wishing you solid trading.